Hello and welcome to Coffee with Switzer. I'm talking to the founder of Booktopia, Tony Nash, at a time when he's going to market looking for crowdfunding for up to $10 million. We'll find out why. Tony, thanks for joining us.
Pleasure.
Tony, a lot of people know the name Booktopia. When did you start and why did you start an online book business?
Ooh. So we started on February 4th, 2004, so coming up to 15 years.
Yeah.
The same day that Facebook started, funnily enough.
Yeah.
We didn't know.
The same day?
We didn't know. We were celebrating our 10th birthday and they were celebrating their 10th birthday. So we found out, must have been a good day to start a company.
Yeah.
It was started on a $10 a day budget. It was a side project. So we were doing web marketing, getting companies to the top of Google, driving traffic into their websites. And we did a job to work on Angus and Robertson's website to get them to the top of Google. And we were introduced to the book industry that way. They were using another company who managed their website and fulfilled their orders.
Yep.
We used the same company to start Booktopia. My brother, who handled the finances at that time, said, I'll give you $10 a day to start the company. He's very generous.
Yes.
Yeah.
You wouldn't have thought much get done for $70 a week.
Yeah, no. Imagine if he gave me $20 a day.
Yeah, sure.
And so, because I was a Google AdWords expert, I knew what to do. I knew how to get to the top of Google. Yeah. And so instead of going for terms for books, bookshop and bookstore, I went for author names and titles and sent people deep into the site. Now this other company had built a system that enabled any bookstore to have a website up and running within 10 minutes. And so all we had to do was come up with a name. So I came up with the name Booktopia. And then we had to drive traffic and they paid us a commission on sales. It was after 3 years that this unexpected side project that was turning over by then a couple of $1 million a year, we decided, hey, we should do this ourselves. And because of our background, my brother-in-law was an IBM software engineer and I had done programming many years before that. We thought we could build our own website and do our own fulfillment, which is what we did. Yep. And so we moved out of 60 square meters in North Sydney to 500 square meters in Artarmon. And we bought some shelves on eBay. We hired a warehouse manager and we started doing it ourselves. So that was in 2007.
Okay. How easy was it to meet the diverse demand? Like, you know, Harry Potter is easy. It's only a matter of how many you have to get to make sure you're answering the market. And the history of other Harry Potters would have told you how much you needed to hold. But diverse books that people never expected to be a success, how did you deal with that kind of thing?
So in the beginning, we held no stock. So
that was a good way to handle it. No stock.
No stock. So an order would come through the website and we would order it from the supplier, would come in and we'd ship it to the customer. That was very slow, took 3, 4, 6, 8 weeks to get to the customer. And it was in at the end of 2007, 2008, where we realized that if we held the stock, that the customer's experience was so much richer. So we started to commit to titles. Now, not the bestsellers of the day, the perennial classics, like To Kill a Mockingbird, How to Win Friends and Influence People, Power of Positive Thinking, all the classic, Harry Potter, Dr. Seuss. So our warehouse started to fill up and we ran out of space. So we moved to 2,000 square meters in 2009 and we thought 5-year lease, that'll last us 5 years. We ran out of space after 2 years, we had to take another 2,000. So the thing about your question in terms of how do you fulfill, that was the reason. I mean, Amazon started on books. Everyone knows that.
Was Amazon good at books by the time you started?
Of course. Yeah. In fact, the thing was in 2004, they'd been going for 10 years, and they said, people would say to me, "What do you want to start a bookstore?"
Yeah. I think I asked that question 3 or 4 years after you started.
Yeah. So Amazon, Borders, Dimmicks, Angus and Robertson.
All going down the Google.
Right. They said to me, "You're too late." You know what people say to me today? It's lucky you got in early. Seriously, that's what they say. Yeah. So the thing was about Amazon's success in books is that the long tail of the internet, which many people have written about, is people are doing searches on Google to find these things. And it's kind of turned a bookshop up on its head in terms of, in the old days, you would go in and the bestsellers was the bread and butter. In the internet, the deeper, because people are doing specific searches for things, actually the more specific you are, the better it is. So by having those titles that bookshops weren't stocking, like in the beginning for us, we got into romance because bookshops weren't stocking romance. And they didn't like romance, it wasn't something that they read, so they couldn't endorse it with their own, with the passion that they needed. We stocked it.
But would you market it? Once you stocked it, would you then market it. It lets you know that if you like this stuff, this is where it is.
Yes, and more importantly, that we tweak the algorithms to ensure that all stock titles are at the top. We had better pricing on those titles, so the stuff was moving faster. So today, we have 148,000 titles in stock. We've got 13,000 square metres out near the Olympic Stadium. And
can't miss it when you drive on the road.
yeah, that's right. Well, I mean, that's one of the nice ideas of having that signage. But the thing is that of the 6 million titles that we have on our site, 148,000 are in stock. So that's 5.9 million that are not in stock.
Okay, so for the ones that are not in stock, how quickly can you get them to a customer?
Look, they can take a week, 2 weeks.
And because they're rare, they're not available in every bookstore, are people more tolerant waiting?
Yes, because they know this is a hard to get title. At the biggest, like a normal bookshop would have about 8,000, your corner store, suburban bookshop would have about 8,000, maybe 10,000 titles. A big Dimmicks would have, I don't know, 35 to 40,000, the ones in the city. The big border stores in the old days would have 100,000, and we've got 148,000.
Are you in ebooks as well?
Yes, we built our own ebook platform.
Yeah, because I know, well, I've done speeches and I've actually made recommendations, say Jim Collins, Good to Great, and some people have instantly downloaded them in the conference and at the end of it say, hey, I already started reading that book.
Yes.
But that's quite a new aspect to selling books, isn't it?
It's still small though. I mean, interestingly, the numbers in Australia are that ebook sales are stable, going down slightly, but ebook trade, so that's fiction and non-fiction academic, so business books, is halving at the moment. Whereas the academic ebooks that are being used in universities, they're actually on the increase. So it's just interesting to see where that sweet spot's coming in terms of the digital version of a book.
Okay, and for a rarer title, how do you compare? I think you can give me a really good answer here. You versus Amazon. Does Amazon have the same problem when it comes to a rare book, that in getting a book to Australia, is it just as hard for them as it is for you?
Sure. It's the same logistics. We're all buying it from the same source. Same source. Look, Amazon, the thing about Amazon today is that, and people don't know this, 3% of their revenue, approximately, is physical books. That's all. But it's still $6 billion. It's a massive number, but it's actually their focus. They today would prefer on their marketplace to have someone else sell the book to someone and they make their commission, which is as much in Europe at the moment as 23%.
So are you on their website?
We are so what we did in the last year is we set up a business within our business called Booktopia Publisher Services. We're a wholesaler distributor. So publishers are now coming to us with our infrastructure and logistics, because we could see that we were selling to bookshops anyway. So now Booktopia has become a distributor wholesaler. So Amazon is buying from us, and we are listing those titles on the Amazon.
So Tony, when my new book comes out next year, we need because we're self-publishing, because we've been publishing for ages. We could go through you guys.
Absolutely, we can be a distributor.
We'll lock it in.
Yep.
Yeah, we want you to be the distributor, mate. All right, now, apart from the fact we've got about 300,000 people coming to our website, so we can do it there as well, but still, it'd be great to work with you. Now, let's talk about this desire to use crowdfunding to get about $10 million. Why do you want the money?
The use of funds is very specific. First of all, we've funded everything up until now ourselves. So we've got from 0 to 113 million in revenue on our own. So that's quite of the ways ourselves. We've got $10 million of automation. But we can foresee the demands from our customers in terms of the number of inbound units and outbound units per day. So a portion of it is going towards automation because that's important to hit those demands. We're actually also investing more in stock. So although we've increased our stock numbers to 148,000 specific titles, 600,000 units, we want to extend that to 200,000, but that really is the long tail. That's one of each. What we're more interested in now is where the demands for those really popular books, your book, for example, right? We don't want to run out. We want to make sure that rather than the algorithms kind of bottoming out and we're waiting for some more to arrive in the next day or so, we want to tweak that so we're meeting the demands of our customers and holding a little bit more stock than we used to. And the other portion is for just the general liquidity of the business, the funding to the operational funds.
Okay, so who's doing the crowdfunding for you?
A company called EquityAcquistors.
equitise, and what's the smallest amount someone could put in?
$250 for 250 shares.
Right, so it's really $1 a share, $2.50.
The thing about the future is that our trajectory has been from FY09, so 10 years ago to now, 9.5 million in revenue to 113.9. So that's 31.9% compound annual growth rate on our revenue.
Yep.
We're profitable. So the goals or the options that we have at the moment in terms of how would they get their money out, which is one of the questions we get asked,
Yeah, of course.
right? And how much are you going to increase? We can't answer that because there's legislation around that. What we are confident in is our strategies to grow, our strategies to build a solid business, which we've done, and we will continue to do that.
So, and this is going to be like a private company, but the public can subscribe to it.
Yeah, so we're a public company.
Yeah.
So we talk.
But you're an unlisted public company.
We're an unlisted public company. That's correct. So, so therefore, people can look. What's possible is, as a public company, those shares can be bought and sold privately, and companies like EquityAcquistors and others can do that on behalf of the current shareholders or the future shareholders. That probably won't be an issue. It's more about what are our options available. What can we actually do to increase the value of the company?
Yeah. And how would someone get to recognise what the value is? So they're bought in at $250 for 250 shares, so $1 a share. After a year, how could they work out whether that share is now worth $1.10 or $1.15?
Yeah, that is not as easy as it sounds in terms of when you buy a house, what is it worth in a year's time? Or it's the same thing.
With any private company. You put money in. But I guess people do want to know what are the potential exit strategies.
Yeah, so there's many. There's probably 5 that are at the foremost in terms of some of the options that are available. One would be to IPO again. We tried to do that in 2016.
Yeah, so that would be a beneficiary if you IPO'd and it was a success.
Yeah, the other could be that someone may want to come in and do a trade sale and just say, I love what you're doing, we're going to buy the whole business, and then we all exit together. It could be another equity investment, but not for the whole company. Someone wants to come in and buy out shareholders and invest or take a position in our business. There's also, as we said, the trading of those shares, but then there's also available to us as a public company a compliance listing. So the 3 criteria to have a compliance listing, which basically means you need to be a public company, which we are. You need to have 300 shareholders that have more than $2,000 each, and I can share with you that we are amassing that number through already in the first week, quite well. And you need to have a market cap greater than 15 million, and you need to have 20% of shares that are tradable. Now, we wouldn't be through this process, but we suspect that having accomplished that, there could be some interest potentially from wholesale investors along the track to look at that and consider maybe a compliance listing is something I'd like to get involved with, and therefore we'd have a discussion with them post this process to see whether that's possible. So there are a number of things available for us. The thing about a compliance listing is interesting. It's much less expensive. You just literally, I won't say roll onto the exchange. There are some criteria that ASIC will look at, but it's much cheaper.
Great stuff. And I guess, are you being encouraged that Bookish Types are showing interest in the crowdfunding?
Look, because you don't really get to see the true profile of the people investing. It's a cross section. What I am really proud of, and I can say, is there's a lot of women's names who are putting their names down and who are investing. I'm really proud of that. And we have a large customer base of probably around 70% women to men. Yeah. So it's a great thing. I'm really proud that that's and they're very passionate Booktopia customers. So therefore getting them involved is exciting as well.
All right, well, Tony, this is Coffee with Switzer, so let's finish off and have a coffee. Great to see you, mate. Good luck with it. That's Tony Nash, the founder of Booktopia. Thanks for joining us.